Hello, welcome to this lesson and business study class. And today we'll be looking at a topic which is double entering system. What is the meaning of double entering? It is a way of recording or posting business transaction two times, that is twice. The double entry system seeks to record every transaction twice in the principal book of account, which is called a ledger. Okay, so what then is a ledger? A ledger is the main book of accounts. It's the main book of accounts. It is regarded as the principal book of accounts used for recording accounting transactions. So it's a book that is used to record transactions in a business. In the ledger, every transaction must be recorded twice, one on the left hand side of an account, and which is called debit side, and the other on the right hand side is called the credit side. So it has two sides: the left hand, which is the debit, and the right hand, which is the credit side. Now the ledger is classified into two parts. The classification of ledger. Now ledger is classified into two parts. We have the personal account and the impersonal account. Now, the personal impersonal account is divided into two, which is the real account or the real ledger, and the nominal account, or you say the nominal ledger. So let's look at the meaning of these classifications. And the personal accounts are accounts kept in the ledger with names of individuals or names of a firm or a company who may be a supplier or a customer to the organization. For example, you can see John's account, Stacy account, or Dangote's account as a company or an individual. Then we move further to the next, which is the real account. Now, real accounts are accounts kept in the ledger relating to tangible things which can be touched or seen. Tangible things which can be touched or seen. Yeah, so we can have motor vehicle account because you can see it, you can touch it. Cash account is also an example, and others. The stock account, the goods you have in shop, all these are recorded in the real ledger or real account. Then the next is the nominal account or ledger. So you can call it nominal account or nominal ledger. And these are the accounts kept in the ledger relating to gains or losses within a trading period. So within that time of trade, there can be losses, there can be profits. So they are recorded in the nominal account. An example of nominal account is rent account, salary and wages account, insurance account. All these are examples of the nominal account. All right, so move further. There are common accounting abbreviations. These abbreviations are used when it comes to business, comes to accounting. We have DRO, which is debit side, then CRO, credit side, the stand for credit, then the B/D is balance brought down, that's BD. Then we have B/F, which is brought forward. We also have C/D, which means carried down. Then we have A/C, which stands for account. Then XL is sales ledger, PL purchase ledger, P and L is different from PL. P and L is profit and loss. P and L, profit and loss. Then we have CB, which is cash book. CB stands for cash book. Okay, there are some other terms that we need to learn about in this topic. So we'll start with what? Assets. What is an asset? An asset are things or property used by the business for its day-to-day running. What you use daily, motor vehicle, furnitures, and cash, all these are assets. The property or things or property used by the business for its day-to-day runnings. They are classified into two parts, which are the fixed asset and the current asset. Then we move to the next is which is liability. Liabilities are debts the business owns to other people or firm. So when a business is owing a firm or other people, it is called a liability. An example is loan. When a business take a loan from a bank or from an organization, is a liability. Another example is debenture. So these are all liability. The next is capital. What is capital? Capital is the contribution of the owners of the business. Yes, the owners of the business. It includes cash and assets. We already talked about what an asset is. An asset is a thing of property. So when the owners of a business contribute, bring these things together to start a business, it is known as capitals. Then let's move further. Double entering treatment of assets, liabilities, expenses, and capital. How are these things treated in double entry? Let's begin with assets. Asset, it increase in assets are debited rather. Increase in assets. So when asset increases, you debit it. That means put it in the left hand side. Then when asset decreases, you have to credit it. So decrease in assets are credited. Then for liabilities, increase in liabilities are credited. That means you put it in the right hand side of the table. Then decrease in liability are debited. I repeat, increase in liability are credited, decrease in liabilities are debited. Then for expense, increase in expenses are debited and decrease in expenses are credited. Then the last is capital. Increase in capital are credited, while decrease in capital are debited. So these are the ways to treat asset, liabilities, expenses, and capital in double entry system. All right, so I believe you've learned something about the double entry system today. We talked about the ledger and the classification of ledger. So thank you for listening. Have a nice time.